Bitcoin seems chaotic on the surface, but beneath all the price swings there is a pattern, a simple mathematical law that quietly connects time to Bitcoin's price. That pattern is called the Bitcoin power law. When people look at Bitcoin, they usually see volatility. One day it's up, the next it's down, and everything seems ruled by hype, fear, and speculation. But what if, behind this apparent chaos, there was a simple equation that links the passing of time with Bitcoin's expected price? That's exactly what the Bitcoin power law tries to describe. The Bitcoin power law is a very simple mathematical relationship between two things: the time passed since Bitcoin was created and the expected price of Bitcoin over that time. If you take the logarithm of time since Bitcoin's birth and the logarithm of Bitcoin's price, and you put them on a chart, you discover that they tend to align along a straight line. That line is the power law. It does not follow every short-term move, every spike, every crash. But over the medium and long term, its order of magnitude is surprisingly close to how Bitcoin actually behaves. Of course, the real market is full of noise. News, emotions, speculation, macro events, all of these create short-term distortions in the price. If we look only at the instant price, Bitcoin seems completely unpredictable. But if we clean the chart by smoothing it over longer periods, with moving averages for example, a clearer signal begins to emerge. And that signal, through time, seems to follow this power law surprisingly well. This simple but powerful equation was proposed by an Italian physicist, Giovanni Santostasi, more than 5 years before the moment of this recording. He discovered that, taking the logarithm of time since Bitcoin's creation and the logarithm of its price produces a relationship that can be described with a straight line. In other words, a very simple mathematical formula manages to describe the behavior of a system that is extremely complex. Bitcoin, with all its users, miners, developers, companies, incentives, and markets, and among all crypto assets, Bitcoin is the only one where such a clear power law has been identified so far. Most likely because it is, uniquely, a highly decentralized system. Power laws are not a fantasy invented for Bitcoin. They appear in nature and in many complex systems: cities, companies, nations, biological systems. Science still does not fully know why power laws emerge. But it seems they arise naturally when a complex system is made of many simple interacting parts. Bitcoin fits exactly this description. A network of countless independent actors, each one following simple incentives, together creating something emergent, strange, and unique. Just as we analyzed Bitcoin technologically to understand how different components cooperate to create something extraordinary, mathematically, this equation does something similar. It tells us that the price, something we usually consider chaotic and purely driven by supply and demand, might actually follow a deeper logic, almost like a kind of emergent property of the Bitcoin system itself. The hypothesis behind this power law has been around for several years. Since then, if instead of watching each daily candle we look at medium and long-term moving averages, Bitcoin's behavior has tended to respect this power law band, describing not only the current value zone but also the typical high and low ranges within its cycles. Of course, on a short timescale, this law cannot explain every move. There is always noise around the signal. But over the long term, and in harmony with Bitcoin's halving cycles, the price seems to gravitate within ranges that this power law can describe, from minimum to maximum, cycle after cycle. Think of mammals. From the largest to the smallest, even if their individual lives are very different, they tend to have roughly the same total number of heartbeats over their entire lifetime. What changes is the rhythm, the speed, the intensity. In a similar way, Bitcoin's price seems to be something that emerges from its technological structure, its social organization, and its incentive design. The power law doesn't control Bitcoin, but it describes how all these elements working together seem to push Bitcoin towards certain levels, certain milestones, certain peaks over time. This is not magic, and it's not superstition. Power laws belong to physics and mathematics. That is why it is better to leave the technical details to those who study them professionally. Giovanni Santostasi, the physicist who proposed this Bitcoin power law, has been studying Bitcoin's behavior for years. His research suggests that what we see in Bitcoin's long-term chart is not a coincidence, but the manifestation of a mathematical law linking the passing of time to the value of each single Bitcoin. So the next time you see a Bitcoin chart and it looks like pure chaos, remember this: behind the noise there may be a very simple line, a power law, quietly tracing the path of a system that is far more structured and far more profound than a simple speculative asset. Bitcoin is not just price action. It might be one of the rare cases where mathematics, complex systems, and human incentives meet in a single elegant equation. Disclaimer and transparency. The script is original and handwritten by me. The digital avatar is my personal creation. My content is not financial advice nor investment solicitation. Study and always do your own research before investing.